Hello day traders, welcome. As you know, on our website sme-fx.com we also have the forum. Every client also has access to the commercial area. It's always a good idea if learning causality traders post their questions there. And here we had one of our clients asking a question about euro dollar. He did a long trade and wanted to know why it didn't work. And I did a very elaborate answer, and I thought it's a good idea to make a video summarizing it. Okay, so we're talking about the 5th of February, so beginning of Feb, and let's look at the day chart. It's very clear. Okay, there are the money longies in the market. You see them above the price. There are all the money longy positions. New longies are coming in, and while there is no proper squeeze, there could be a squeeze if more longies come in and the green slope, the green line slopes upwards. Yeah. Of course, yes, the recent low has been taken, but there's a next low as a nice target. And above all, we clearly see the long-term stops, the pink lines below the price. So from that screenshot alone, you see that the outlook overall is bearish. Okay, so if the money long is in the market, the stops are below the price. So the smart money algos have an incentive to push euro dollar down, let the longies lows take their stops, clear the next low. Okay. So you don't want to buy into a market like this. All right, that's quite clear. Okay. Even from the 4-hour chart, you can see, so while the price has kissed the lower band, we do not have the conditions we need for our reversal. Okay. The latest money flow is long. There are old and new longies in the market. Above the price, they're all the money long positions. So it doesn't make sense for the algos to allow the price to go up, because then those longies would win. Instead, they want to push down. We also see the long-term stops within reach just below the price, so it's very clearly bearish. Even the squeeze indicators show you that overall we have more longies than shorties. And even though we don't have a strong squeeze, I mean, it's clear that we have a bearish outlook also on the 4-hour chart. All right. Now, so you see on the 1-hour chart from later on that yes, the option strike target has been filled, and yes, we do have another medium-term stop above the price, but we have the big US news in the way. Okay, so you do not want to buy into a bearish higher time frame with news coming out, because most likely the algos will use, or rather abuse, the news in order to go for the actual money positions which are targeted on the higher time frames, which they did here. Okay, so even if for whatever reason you bought towards the MTS here, you have to say, you know what, I need to close because the news are coming and I'm trading against the higher time frame bias. As simple as that. All right. So what happened? Yes, the news came out, the algos pushed euro dollar down against those longies, killing them and taking the stops, clearing the low and all of that. But guess what? As I posted then later on, what happens? Shorties come in, so after that they go up against the shorties, they take the first MTS and then also the original MTS against those money shorties. So you see, that's how this works, how the causality works. That way they push the price against the longies, but they also push the price up against all the shorties. Okay, they make sellers and buyers on the money side lose overall, and they use the news in that plan also. Okay, there is no rush to take the upper MTS quickly. As you can see, they just did it after. Alright, so these are very important principles. In order to trade successfully with the market causality, you need to understand them. And please go here to read all the details if you like to. This is just a summary. And as I wrote, take note of the following. If you just see a naked chart, you have no clue what's going on. If you see a naked price chart without all this information, the longiest thing, come on, the price came down so much, I will buy cheaply into the market, and what happens? They get killed with a down move. And then once the price came down so much, the money shorties think, come on, the news are out, there's momentum, so I'm going to sell. It's an expensive entry, but clearly the price is to go lower to price in whatever the news showed, and they sell, and what happens? They enter expensively into the market just to get position hunted themselves with the up move. So that you see, it all makes complete sense, okay? And you see that the causality unfolds as it should. There's no rush to take a stop quickly. eventually they can take it, but they will take the stops subject to the dumb money positions, okay? Like I always say, like water flowing around stones in a river, okay? The stones being the dumb money positions, the price tries to flow around, and eventually, of course, the price will reach the targets as pointed out. All right. So this is a very interesting example because it shows you how these things interact and work. And as you can see, it's not difficult to analyze the charts based on that kind of knowledge. All the best.